Okay, good morning everybody. Mike Niemiec here, filling in for Steve for the day on this Monday, October 15th. Well, it's the start of the mid-month week here. We ended the week last week with pretty much unchanged values. We had the USDA report last week, the monthly crop production and S&D numbers. On paper, in my mind, they still didn't look all that bullish and or still non-bullish and or a little bit on the negative side considering the carryout numbers that we had. It is ironic that the carryout numbers, both in the U.S. and the world, were higher than a month ago, but because they're a smidgen smaller than what the trade was looking for, the trade took it as somewhat of a buy the market type attitude instead of continuing to see that we have adequate supplies. We did, however, see a little bit of a reduction in the corn and bean production numbers versus a month ago. We had our commitment of traders report come out on Friday, and some of that buying support that we've seen in the market comes as far as money flow goes. We see in the corn, beans, and soybean oil, the trade lighten up their modest to small net short positions. They still are that way in the report as of Friday's close. They added to their net long position in the meal. That too is somewhat of a modest net long position. The only thing they really added to was the soft red winter wheat position, and there too it's still somewhat of a modest to small net position. Kind of thought that going forward in here, at least to start off the week, we are still going to look at crop progress after the close. They're still looking in the neighborhood of around 45% complete for corn and beans, so we still have somewhat of a ways to go. I guess the strength that we saw seemingly from the USDA report last week, and this has been going on ever since the reports have been coming out since July that have been non-bullish, that we've been getting the buying support, was to go and see how much hedging we would get coming into the marketplace to go and weigh on prices from last week. We're not really seeing that much as far as the overnight trade goes. We're somewhat pretty much unchanged in corn, wheat, and beans. We'll get our export number coming out here at 10 o'clock. There too, it doesn't seem anything too fantastic for the wheat and or the beans. We're still running well behind what the USDA projected on Thursday's report last week, but still the only bright spot is corn running well ahead. And then at 11 o'clock, we'll get a NOPA crush number that's coming on out. The crush numbers as far as what we have as far as crushing margins, looking for a strong crush, somewhat unchanged from a month ago, but up sharply from a year ago. So keep an eye on that as well. So all in all, hedging on the sell side, how much we get there, buying on the demand side, how much we get on breaks, money flow. All in all, I'd have to say currently where we're at with the carryouts, that's going to be somewhat to sustain somewhat of price rally fundamentally, much above 475 to much above 375 to $4 in the corn, and or roughly 875 to $9 in the beans, and perhaps working our way through the remainder of the month of October, somewhat sideways at best. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.